In this presentation, we will perform a bank reconciliation for our business checking account for the month of January within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. To open the open windows, you go to the view drop down and select the open windows list. This will be an easy reconciliation given the fact that we entered all of our data into the system directly from the bank statement. So the bank reconciliation is really just checking to see if we had any data input errors, but still a necessary component of the process. Therefore, we will complete the bank reconciliation by going to the banking drop down up top. We're going to go to the Reconcile item. And we have the checking account. We're going to reconcile for the date of 01/31/20. This is the month that we are working in. Then, once we do the first one, will always populate for us properly. Notice we don't have the correct beginning balance. In other words, if we go to the bank statement, we have 1,000 in the beginning balance and 0 currently now. That's because it's our first year of operations. We didn't use the beginning balance function, but rather we're going to just check off the 1,000 as if it cleared in that month. That's one way to work around. We discussed the pros and cons of it before, but after we enter that information, then we'll be all good going in the following months going forward. That's just one of the things we're going to have to deal with as we set up the way we set up the bank statement in the first month of operations. So we're going to then say the ending balance needs to be 3853. That's it, 3853. We're not going to need anything else. I don't usually use these interest or service charges because I'd rather just enter those into the register and make sure I know exactly how it's being entered and how to check it off. So that's how I would prefer to do it personally. Then we're just going to go and continue and say OK. And then we're just checking these off, and they should, like I say, match directly because we entered this directly from the bank statement. So if there's any errors, we'll go in and we'll fix them as we go. So let's go through the deposits first. We've got 2,000, 3,006, 52, and 49. So that should be over here. We've got the 2,000, the 36, the 52, the 49. I could just check those right off, no problem. But I had this added 1,000. And why is that there? If we go back here, that's this number. So remember, I'm just going to check those off. It wasn't in the beginning balance, but now I found it in the data. So I'll just check it off and say, okay, that's found. And we could just check these off. That's found. That's found. That's found. That's found. And I missed that's okay. And then I'll just check this one off too. So all the deposits are there. And then we'll go to this side, to the checks, and we'll just go through all the checks. They should be straight in order pretty much. So we got the post office. Let's just go by number. So 320 and 5100. Back over here. 320, 5100. We could look at the post office. We don't have the check numbers because they're electronic transfers. And the date's going to be exactly the same because we entered this directly from the bank statement. If it was not, if we were processing this ourselves and then double checking with the bank statements, then the dates would differ, but they should be the same in this example in this case. So then we're going to say, all right, we found that one, we found that one, and now we're looking for the 15 and the 600. So there's the 15, there's the 600. So we've got those two. 15, found it. 600, found it. And then the 410 and the 598. So here's the 410. There's the 598. So I'll go back over here and say found it. And found it. And then we'll just do the rest of these. 3539, 630, and 150. 3539, 150, and 630. And if it goes to 0 here, that means we're in balance. And notice if we're doing this in a straight cash basis method, and we believe that we entered everything in there correctly, then you couldn't do this if it wasn't a cash basis. But if it was just a cash and we just entered everything directly from the bank statement, we could use this method of unmark all and just mark all, right? So it's out of balance right there. If I just say mark all, then it'll mark everything that's there. And if we entered everything directly from the bank statement correctly, it should all match up and we should be good, and the difference should reconcile. So again, this reconciliation is a very easy one because we're doing this kind of cash basis system, but still worth doing to make sure that we don't have any data input problems. So then we're just going to reconcile, and it'll generate the reconciliation reports. If we take a look at those and display the reports, we'll get these reports. Now, they don't give us much information because, again, all this basically tells us is that we entered the data directly from the bank statement and we didn't have any data input errors. It's not really reconciling two different sets of numbers because we're both using the same debt, the same numbers. So it's not really, in other words, there's no outstanding checks or outstanding deposits, but it's still necessary to do or worthwhile to give us a check against us making a data input error. So I'll close this back out. Here's the detailed report, basically still just tying out to what's already on the bank statement, and there are no outstanding checks or deposits. So those are the two reconciliation reports, and that is the bank reconciliation. For more accounting information and accounting courses, visit our website at accountinginstruction.info.